Yes, welcome back everybody to Altcoin Daily. My name's Austin. The cryptocurrency market is pumping today with Bitcoin, Ethereum, altcoins in the green. The big question is, though, is this sustainable? In today's video, that's exactly what I want to discuss. I'll play a clip of CZ addressing this question, as well as recent altcoin news you should know as an investor. So, like always, check the timestamps down below, hit the like button, and let's jump in, starting with the overall health of the macroeconomy. GDP falls further in Q2, fueling talk of a recession. And even though technically we are in a recession until they change the definition, the widely used technical old definition does say that 2 consecutive quarters of negative GDP means the economy is in a recession. And that's where we're at right now. Gross domestic product, GDP, declined in Q2 at an annualized pace of 0.9% in the second quarter, making 2 consecutive quarters of economic contraction. So a decline of 0.9% in Q2, coming off of a decline in economic activity of 1.6% in the first quarter. So because of this clear contraction in the economy, by all means, we should call this a recession, an official one. However, many economists, and even Federal Reserve Chairman Jerome Powell, at a press conference just a few days ago, have refrained from calling a recession because other factors, like the labor market, show signs of a strong economy. So instead of 2 consecutive quarters of negative GDP, both the government and the Fed now defer to the National Bureau of Economic Research, NBER, to declare a recession. In a direct quote from Powell, he says, "I don't think the U.S. is currently in a recession, and the reason is there are too many areas of the economy that are performing too well, taking into account employment, personal income, and industrial production, now in addition to GDP." Anyway, what this means to you as a crypto investor, because of the clearly constricting numbers in the traditional economy, does this mean this is a false pump, a fake out in the crypto economy? Well, CZ of Binance on CNBC this morning addressed just that. Why would anybody choose to invest in crypto today when a looming recession is still possible? Are we correlated? Are we not correlated to the stock market? CZ, what is the answer?
But if crypto is so tied to macro factors these days, which it seems it is, even if you're just looking at this new move after the Fed's decision and the move higher in both equities and the price of Bitcoin, for instance, if a true recession takes hold and things sell off, why would one want to own cryptocurrencies? Aren't they only just going to fall backwards if we are truly in a recession?
To be honest, logically, cryptocurrency should move counter to the stock market. So they should be negatively. In theory, they should be negatively correlated. But today, the cryptocurrency market is so small that whenever the stock market crashes, stock markets, I don't know, like just in the U.S. is about 60 trillion something. Bitcoin, but crypto markets altogether is just about $1 trillion today. So when the big ships tank, when stock markets crash, people want to hold cash. And today, most people who are trading cryptocurrencies also trade stocks. So right now it's positively correlated, which is illogical, but it's just the way it is right now.
Okay, really interesting perspective from CZ, and let me give you my opinion on this. Number one, CZ is absolutely right in the sense that in the short term, cryptocurrency is absolutely correlated to traditional markets just because of how new the space is, how small the space is compared to traditional finance. Now, that's a good thing in a sense because it does mean we are early. When crypto is big enough that we no longer have that volatility any more to the upside than to the downside, that means mass adoption will already have happened. For now, in the short term, price-wise, we are affected by those bigger traditional markets. That's for price. The monetary policy for Bitcoin specifically remains the most uncorrelated. And what do I mean by that? Well, Bitcoin is just math. It's just software. As opposed to the Fed, where we have to wait every month, every meeting, for them to decide, are they suppressing markets? Are they pumping markets? Nothing is more centralized than the Fed's actions on the US economy. But with Bitcoin and the money supply growth rate for Bitcoin, it's all just math. It's all just baked into the code from the start. Hey, I'm pretty new in the space. Could you clarify what that chart means for me, please? Yes, the Bitcoin monetary policy is already determined until the end of time. gradually approaching 21 million coins, with the new issuance cut in half every 4 years. This stands in contrast to central banks' monetary policy that is determined by old people in an ivory tower. So Bitcoin is the most decentralized, the most censorship resistant from a monetary policy, which does bode well for the asset long term. But hey, what about Ethereum? What about altcoins? What's happening in the industry today? Well, next up, let's start with Ethereum and the merge. Ethereum Dev confirms go early merger date, the final update before the merge. And why this affects you as an ETH holder is because the Ethereum mainnet is now just one testnet merger away from officially transitioning to a proof-of-stake blockchain. After multiple shadow forks and testnet merges, the years-long journey has reached the final stage with the announcement of the final testnet merger to the Beacon chain. And this official announcement was made from the lead developer. Lead Ethereum developer Tim Beiko took to Twitter to announce the details of the Go Early testnet transition. This is what Tim Beiko tweeted out, and this is officially happening between August 6th and 12th, which means that the official merge, the mainnet merge, is still on schedule for September. Next up, what about altcoins? Well, an ApeCoin proposal to fund a 24-hour Bored Ape Yacht Club news site wins community approval, so the Bored Ape Gazette will focus on all Yuga Labs projects while including NFT market data. So this is what the ApeCoin DAO is spending their money on. Dubbed AIP70, the proposal, which involves allocating a portion of the project's ecosystem fund to enhance the news site, was approved by the community on Thursday. The overall cost of updating and operating the Bored Ape Gazette website is expected to be $150,000 for the first year. So they're spending a good chunk of change to start their own newspaper website and get their own information out there. The website will also include an ApeCoin price chart, a DAO tracker that monitors governance votes, an Ape calendar, and a live sales ticker showing activity across all Yuga Labs projects. So if you hold ApeCoin or Bored Ape, you'll love this. And next up, what about Solana? Solana set to open an in-real-life retail store and Web3 embassy in New York. So digital is going analog. The Solana-themed store is set to open in stores in New York City called Solana Spaces. And in a direct quote from Solana on why they're choosing to do this, inside the store, you'll learn how Solana works, what Web3 is, we'll set you up with a wallet, your first NFTs, and guide you through your first on-chain transactions. It added that it designed the space to be a cultural center and embassy for Solana. And we are beginning to see some pictures because before the grand opening, Solana Spaces opened up its doors this past weekend for a select group of 30 visitors to preview the store. And to me, this looks very similar to a modern Apple store. I think this could be very interesting to sort of onboard your normie friends or just any sort of traffic on New York streets and say, hey, I'd like a crypto wallet. How do I set it up? Show me. Whoa, you'll give me a Solana NFT? Cool. And next piece of news involving Voyager. Bankrupt Voyager Digital calls FTX's bailout a lowball bid. Specifically, a lowball bid dressed up as a White Knight rescue. Wow, I thought they would have been grateful for this, but they're actually a little peeved. What are the details? They made these statements in documents filed to bankruptcy court in the Southern District of New York on Sunday night, and Voyager said that the joint proposal made by FTX and Sam Bankman-Fried's other firm, Alameda, was designed to generate publicity for itself rather than value for Voyager's customers. Voyager further claimed that the way the proposal was made via a public press release could jeopardize a separate bidding process for the company's assets, which is happening privately. So they're saying that FTX shouldn't have announced this bailout publicly because it sort of inhibited a bidding war where Voyager maybe possibly could have gotten more money. As I get more info, I will keep you updated. Let's keep moving. All right, that is the video. My name's Austin. Like always, see you tomorrow. And by the way, Aaron and I will be speaking at a panel in LA this weekend at NFT Expoverse, the largest mass adoption blockchain event in 2022. It will be at the LA Convention Center. Be sure to grab your tickets, and if you see us, come say hi. We'll be chilling all week at the convention.